Good morning. Thanks for tuning in. You're watching the F&O Show on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Vakil. Let's take a look at the headlines. Markets begin the final trading day of the decade on a subdued note. The Nifty trades below the 12,250 mark. The volatility index is up for the second day. Open interest is rising in Mindtree and IGL. And Chalet Hotels trades with gains after the company signed a new agreement with Marriott International for over 1,500 keys. And Jet Airways is locked in an upper circuit after Bloomberg reported that the Hinduja Group may submit an expression of interest for the grounded airline by January 15th.
All right, those are your top headlines at this hour. Agam, I don't know if you're going to start the new year and a fresh start to a new decade on a good note by working tomorrow.
Oh, it's the best way to start any year, isn't it?
No comments there. While most of the markets will be shut, I think India will be open, so we'll meet our viewers tomorrow as well. But on that note, let's quickly tell you what's happening on the last trading day of this calendar year. It's a subdued day because we are seeing actually profit booking coming in at higher levels. Remember, 12,300 has been a big resistance for Nifty. We've not been able to surpass that level yet. Even we've not touched the mark of 12,300. Sensex also down about 130 points in trade, and Bank Nifty, which has been trading around its live high levels, has also seen some cuts this morning. That's down about 0.5%. Remember, India Volatility Index has bottomed out now, I guess. 10 to 11 was the mark that it touched last week, and that was almost 7-month low. But since then, it's been inching high. Yesterday also, the VIX was up 3 to 3.5%, and today also we are seeing gains. Remember, we are heading into the budget session, ahead of which you can see more of volatility to come by. So it remains to be seen if India VIX now from these lower levels can scale higher or not. Very quickly pull up the broader markets as well, small cap and the mid cap index. Okay, some green at least on the screen because slight bit of outperformance coming in from the broader markets. But remember, on year-to-date basis, broader markets have underperformed. Both mid cap and small cap indices have given you negative returns for the second straight year because we did see cuts coming in even in 2018. Market breadth should also come up on your screen and check what the entire listed universe is up to right now. So it's actually in favor of advances, but remains to be seen whether this trend can last or not for through the day. In terms of futures, Nifty futures and Bank Nifty futures, yesterday there was unwinding seen, but we're just seeing slight bit of addition. Premium has come off from levels of 70 to 60, and for Nifty Bank futures, where premium has been on the higher side, yesterday's closing premium was somewhere about 200 points, so that's also fallen off to about 150 points. Quickly then, in terms of level, what's happening on the option side, we're looking at a very narrow range. Remember, in terms of maximum open interest concentration, it is at the 12,300 call where we are facing resistance, and 12,200 put has been sitting with maximum open interest. We did defend the mark of 12,200 yesterday, so I think that should be the first support to be watched, and second should be the 20 DMA, which is somewhere about 12,100. But today there are two strikes which are active, and that's 12,250 call, which has seen aggressive writing in today's trade. Almost 14 lakh shares have been added there, while the 12,250 put has seen some bit of unwinding, indicating 3 lakh shares have been shed. That put writers of this strike are running for cover. So let's see, at least for the day, Agam, whether we can close around the mark of 12,250.
All right, fair enough. We watch out for that mark. But moving on, let's also talk about a handful of stocks which are looking at as an increase in open interest out there. Perhaps, early takers for the January series. And we do have Jubilant Foodworks, Mahanagar Gas, which, and along with IGL, for that matter, are all seeing a good increase in open interest. And, MGL and IGL specifically in this case are looking at a little bit of an advance. Not too much, but an advance of around 1 to 2% all the same. Just on the other hand, is under a tad bit of pressure. It's down around 1.5%. There's some shorts coming in, and Manappuram Finance, the other one, which has been on a roll of late. Its spot isn't moving too much, but we are seeing a good gain coming through in open interest. Let's talk about stocks which are seeing unwinding then. And early on in the series, we're not going to see too much happening here, and that is evident on your screen there. Say for Oil India, which is looking at a decline of less than around 0.7% in terms of its open interest. So very quiet day of trade for those which are seeing any unwinding whatsoever. But on the whole as well, Navneet, I reckon we're not expecting too much from turnovers today.
Not at all, Agam. In fact, we've already seen the turnover declining in the last 4 to 5 sessions. Even if you look at the gross figures that we're getting from the FI and the DIIS, that's been going down. In terms of individual stocks, though, on the show today, we will be discussing IGL. Remember, this has been an outperformer for 2019. The stocks gained about 60%, and today the stock has witnessed both price action as well as open interest build-up. In fact, volumes in the cash side also appear to be higher. United Spirits is the other one, which is witnessing third straight day of gains. In fact, though with these gains, the stock still trades below the mark of 50 and 100-day moving average. And lastly, Apollo Hospitals is in focus, which is trading above 50 and 100-day moving average, and this particular counter has gained for the 4th straight session.
All right, there you have it, a handful of stocks we'll be addressing today. And it's time to get in our experts for today. But before that, here's a reminder. If you have any queries regarding futures and options, you can call us on 022-454-04141. And of course, write to us on Twitter, Facebook, and YouTube with the AskBQ hashtag. Today we have with us Nirav Chheda of Nirmal Bank Securities and Amit Shah of BOBCAPS Markets, who's joining us on the show. Good morning to both of you. Thanks for taking the time out. Amit, wishing you a very happy new year. Where do we go from here as we move into the next decade?
Happy New Year, Agam and Navneet. As Navneet likely highlighted, that 12,300 has been a resistance mark for the market, and we have struggled around those levels. So if you join the trend line from August 2018 high to September 2019 high, it is hovering around the same 12,300 odd mark. So that is acting as a trend line resistance for the market. Though the call writers are moved towards 12,500, and the put writers have been quite strong since December expiry around 12,000 odd strike price. So that will act as a good support level. On a technical basis, we had earlier faced a resistance around 12,150, so that should act now as a support level for the market. So till the time 12,150, 130 is not violated, the biasness will remain on the positive side. On the upside, however, we need to sustain strongly about 12,300 for further momentum towards 12,500 on the higher side. The base of the open interest on Nifty has been quite subdued. It would be interesting to see how the start of the January month, the open interest picks up from here on. The base is close to around 1 crore 23 odd lakh shares. I would be more inclined where the base increases along with the price rise, and provided once it breaks about the 12,300 odd mark.
Okay, so 12,300 remains key for Nifty, which we have been monitoring. Happy New Year, Amit. And Nirav, Happy New Year to you as well. On this last trading day of this calendar year, are you recommending to take any position?
Yeah. Good morning, Navneet and Agam, and a very happy New Year to both of you all and to all the viewers. For Nifty, I have been positive from the last few months. It is basically based on data, and the data is still suggesting, Nifty is likely to move up further. I've been repeating it, but at the cost of being repetitive, I believe open interest is something in Nifty which is so low that selling at with this open interest doesn't make any sense at all. So the follow-up selling would not come in Nifty. The incremental selling which is needed for a big move on the downside would be missing because the open interest is so low. And that is why the only option for Nifty is to move up, and this is the most hated rally for Nifty. Ever since 11,200, 300 was broken, people have been bearish. What has really happened in this rally is 3-4 weeks Nifty makes such a move that it looks like the market is going to become bearish, and suddenly there's a 2-week move where Nifty just breaks out. And we are again into those 2-3 week moves where probably Nifty looks like it is going to fall from here at every day trading perspective wise as well. Looks like it is going to fall, but it doesn't fall. It continues to make a higher top higher bottom formation and steadily moves up. So I believe that would continue. Nifty should reach the 12,500, 12,600 odd levels, because again the open interest is low. The VIX is around the 11-12 levels, which is very comfortable. The PCR around the 1.2 odd levels is comfortable as well. So all in all, I believe one should stay invested, continue to buy on dips. If you get dips towards 12,250, go ahead and buy. I believe 12,180 would be a good support and a good stop loss. It should bounce from around the 12,200 odd levels, good put built up around those levels as well, and Nifty should move up towards the 12,500, which is the ultimate target.
Okay, that's your view on the benchmark indices. Let's talk about stocks then. Amit, I'll come back to you. Stocks looking interesting to you in the near term?
Well, the stocks which were buzzing on the open interest side, both Jubilant Food and IGL, I have buy recommendation on both these counter. Now, if you look at IGL, the stock has seen a very good rollovers in the overall gas space. It has been hovering around its all-time high level. The stock has a very good support around 425, 420 odd level. I believe any decline towards 420, it should be utilized to add more positions on the stock. Looking at the broader structure, if you look at on the monthly time frame, the stock is in a structural primary uptrend where breaking above and sustaining above 435, the stock can see rally towards the uncharted territory and can see momentum towards 450 in near term and eventually towards 480 levels on the higher side. Jubilant Food, since the inception of the January series, the stock has seen a significant rise in the open interest. The open interest since the Jan series, it has increased close to around 21% as of yesterday, and today it is increased by around 13% odd. So I believe the stock has a lot of potential. It had seen a good sideways activity since October end onwards in the range of 1550 to 1640 odd level. This time it has given a breakout above this range with strong open interest built in. So I believe this breakout can be sustainable and can see series of higher top, higher bottom formation from here on. I believe a conservative target to look forward on Jubilant Food would be around 1750, 1780 odd. On the downside, 1605 will act as a good support.
Okay, in fact, we wanted to discuss IGL on the show, but since Amit has already given his a call, just want to state few data points. Of course, it's been an outperformer this year. On YTD basis, the stock has given returns of 60%, and today we are seeing action in both in terms of price and OI build-up. But not only that, as you can see, this year the stocks gained about 62%, but today's volume on the cash side are pretty much on the higher side as well, because if you look at almost 10.5 lakh shares have been traded on NSE, and yesterday's full day volume was somewhere about 15.5 lakh shares, giving you an indication there is cash-based activity also seen for this counter. In fact, as per the latest data available on NSE, nearly 40% of the traded quantity so far traded has been marked for delivery. Maybe there is cash-based buying as well alongside long bets which are seen on the future side. So instead of IGL, I think we can discuss MGL going ahead with our guest, because that one too is doing well in trade. But before that, Nirav, what are your top picks for today?
Yeah, see, TVS Motors, if you see, from the last rollovers to the to this one as well, the open interest continues to come down, and looks like after a long time the shorts are exiting the system for TVS Motors, and that is a very good sign for the stock. Because the rollovers are low, now after the short covering, the next point in the open interest cycle comes the long creation, and that is what is going to likely to be happening. That is what we saw yesterday as well. TVS Motors saw price volume breakout above the 460 odd level. So I believe one can be buying the futures at current levels, place a stop loss around the 455 levels, and the possible target can come around the 485 odd levels. The second stock is again a rollover from the last month data, and that is Coal India. See, Coal India in the last month saw significant reduction in open interest, and in fact it was a last month pick as well, but it did not move that much. It remained in range, and finally seeing some good volumes happening now, and there's a price action as well. There's a trend line breakout which is in place now around the 201 levels. It is moving moved above the same on the futures. I believe one can be buying Coal India at current levels with a stop loss of 198 and a possible target of 215.
Okay, so those are a handful of stocks coming in from our experts. It just so happens that incidentally, we wanted to talk about city gas distribution, and Amit has already addressed IGL. Let me also pull up MGL for you guys, because that is also seeing an equal amount of increase in opportunities. And perhaps I can take Nirav's view on both IGL and MGL, perhaps something that stands out for him. Nirav, on both these counters, we all know about the kind of traction that they have seen in the year gone by. But at this point in time, how are you placed? What would your preference be between these two?
Yeah. So, very important is the trading framework, the time span for which you want to hold on. If you are a little longer term investor, then definitely IGL is the one one should be buying, because there is a linear uptrend for the stock, and it looks like it is going to continue. The stock is likely to reach the 600, 650 odd levels, looking at the retracement as well. On the other side, from a trading perspective, MGL looks very good at this point of time. I believe MGL, from the 800 odd levels, the rally it has seen, every point, every 50 odd 60 rupees, it is witnessing consolidation, then again a breakout for a 2-3 week period, and then again a consolidation. It is a very classical pattern. Looks like it is going to go up towards the 1150 1200 odd levels, which is the next resistance area. So definitely, for a trading perspective, I'll be buying MGL. One thing here in MGL is about 3-4 months back, open interest wise as well, it had become positive, and that is, that has been sustained. So definitely I'll be buying MGL for trading perspective with a stop loss of 1020 and a possible target of around 1140, 1150 for this series. As far as IGL support is concerned, I believe 400 is a very good support area, and it should remain intact. It has given a breakout in today's session, and as Amit has given a buy as well. So use his stop loss and the targets for trading perspective.
Okay, so both the gas distribution companies are looking good, but shifting focus from there to United Spirits, a stock which is up for the third straight day, but it is still trading below its 50-100-day moving average. Maybe the reason for today's gain could also be because CRISIL has revised the outlook to positive from stable on its long-term facilities and also on NCDs. No major build-up coming in on the future open interest side, but I guess the cash volumes are definitely on the higher side. Last when I check, I think almost 10 to 11 lakh shares have already been traded here. Amit, on the charts above the levels of 600, is it looking attractive?
So if you look at a slightly positional time frame on the charts since August 2015 odd, the stock is in a triangle consolidation formation. So where it is making a lower top, lower higher high formation and trading in a symmetrical triangle pattern.
Right.
So if you look at the breakout level, it is somewhere around 660, 665 odd. So unless and until that is not crossed, it is likely to spend some time consolidation further. It is right now at its bottom trendline support, which is somewhere close to around 580, 590 odd, and it's hovering around 605. Though in the short term it is showing some kind of a momentum. Above 610, the stock can test its upper trend line, which is around 660 odd. But the moment it breaks above 660, it will be a confirmation of this triangle consolidation pattern, a breakout above that. And from there, the rally can be sustainable towards 800 odd levels. So in case if I'm a short-term player, I would trade with a positive bias with 590 as my stop loss, for 630, 660 as the immediate target, but would be waiting for a confirmation to trade above 660 on a monthly closing basis.
Okay, well, that's on United Spirits. And moving on to Apollo Hospitals. Now, this one has also been gaining for the fourth straight day. It's above its, and it's very recently moved about its 150 daily moving averages. It's also up as much as 14%. It really hasn't outperformed the broader markets or the Nifty for that matter. Sure, it is just a notch above that. But as compared to many other stocks, not the best of performances coming through, even though it has reared its head up again of late. So the question is, can we expect a little more to come through for Apollo Hospitals towards the long side, or is it looking at some more weakness going ahead? Nirav, what is your opinion?
Yeah. See, Apollo Hospitals, is moving in a flag kind of a formation ever since, it moved from sub 1000 odd levels to about 1500 odd levels. The rally was constant, and some consolidation had to come, and which is what is happening in Apollo Hospitals at this moment. Having said that, it is on the verge of breakout. It has just reached near the flag resistance of around the 1455 levels. Once this is crossed above and closed above, I believe Apollo Hospitals should again make a move very aggressively for 1550 1600 odd levels. So my view would be to buy above those levels on a closing basis, and the stop loss for the same should be around 1420.
Okay, that's Apollo Hospitals for you, doing well in today's session. Let's move on and start addressing some viewer queries that we've got. So this one comes in from Harshvardhan, who writes to us on YouTube. He shorted HPCL 270 put strike at a premium of about 8.8, and these are the futures. If you can just pull up the 270 put of HPCL, I think the current premium is somewhere about 9.7, so it has gone up from the levels that our viewer has written at. Amit, would you advise him to stay put with this position? It's still slightly out of the money because the underlying is at 267.8.
So well, though the time is still there for the Jan expiry, on the downside it has a very good support around 261. So as a put writer, you will incur a lot of losses if it violates the support level. So I would recommend 261 as a very strict stop loss to hold on to this position. Once it starts hovering above 270, which is the strike price what he has written the option at, I believe there can be a good pullback towards 284 levels on the upside. So that's where he can gain some premium getting eroded, and he can make some profits. But 261 currently should be held as a strict stop loss.
Okay. Well, we move on to a query from the F&O student. His question is on Interglobe Aviation levels to watch. It's been a hard stock, and especially after coming off from levels of around 1850 back in early October, currently at around 1350. Where do we go from here? Nirav, what is your assessment of Interglobe Aviation?
Yeah. So, for this again, I'll be going back to a little bit of rollovers. See, when rollovers happened, we do send in a message to most of our clients and all, also on Twitter. What has happened in Indigo is the open interest has surged to such a point, the shorts have built to such a point where now incremental open interest cannot be built in, and that is why the only point that can happen in Indigo is short covering, and that is what we saw in the last week, and probably it will continue in this week. There along with that there is a bullish engulfing kind of a formation on a little longer term charts, and that is also a very positive sign for this stock. I believe this month Indigo should perform, and that rally would be driven by short covering, majorly short covering. So I believe it can move up towards the 1450 odd levels very soon. So I personally think I should one should be buying Indigo at this point of time with a stop loss of around 1320 odd.
Okay, so Nirav suggesting to buy Indigo with a stop loss of 1320. The next query is on Nifty Bank. Venkat Sai's bought 32,200 put at a premium of 120, and this is for the 2nd Jan expiry. He wants to know whether he should stay put with the position. So he's in the money because the current premium is at 129 to 130. Amit, should he be booking profit or stay put with the position?
So the biasness still remains on the positive side, as Bank Nifty is holding above the momentum support of 32,000. Though considering the last 2 days of breakdown from its breakout level, the stock can see some kind of a time price consolidation, but I don't see more room on the downside where 32,090, 32,050 odd levels can be seen. So I would recommend a strict stop loss around 32,400 for this long put. If it violates 32,400, the Bank Nifty can see some fresh buying momentum from there on. But on the downside, 30,000, 32,090, 32,050 odd should be considered to look to book profits for this trade.
Well, we had a query on Amber Enterprises from Girish Kumar. Girish, we will take this one up at 12:30 because this is a cash query and does not well happen to be in the futures and options space. But we have another question on Yes Bank, March futures. Gopal Sachan has bought it at 41 rupees per share. You know, Amit, we've spoken about this ever so often, Yes Bank. What is your view here and what is your suggestion to Gopal here?
Book profits and stay on cash rather than enter into this counter.
Right.
The risk of trading is always on the higher side for such counters where it has already witnessed intensity on the price fall.
Yeah.
So definitely making somewhere around 8 to 9% on a counter like this, it's definitely a bonus. Should take profits as early as possible.
Right.
Just on a technical per se, on the downside, the stock holds support around 43 odd. If it violates that, again, the stock can see further downside towards 39, 38 odd levels. On the upside, the stock owns multiple resistances, immediate being at 51.
Okay, if you're making money in Yes Bank, please book profits, and that's what Amit has been advising. Remember, it's a high beta, very volatile counter. Let me just address Tata Global Beverages and also Tata Chemical. Both these stocks have moved higher. Both of them are sitting with gains of nearly 1%, 2.5%. Tata Global is up about 1% in trade, while Chemical also up about 1%. Nirav, looking at the charts, would you recommend trading into any one of them?
Yeah. You know, looking at the overall structure of both the stocks, you know, both can be bought, but Tata Global has seen a linear move from sub 200 odd levels, continues to perform well on the upside. So looks like low risk at this point of time. Having said that, you know, Tata Chemicals as well, with the open interest being low and not, you know, very liquid, I believe Tata Chemical also can be traded on the long side. You know, you can use a stop loss of around 650 for your longs, and, you know, look for targets of around 700, 710. Some good momentum has come into both the stocks, and, you know, both the stocks should perform probably in this week or, you know, early part of the next week.
Okay. Well, you know, since we were talking about Yes Bank, it's important to know what your position sizing is. And of course, if your position size and if your overall, you know, equity allows you to take a position in futures, then that's a different thing. But if not, especially for counters like Yes Bank, it is always a little more advisable that you play in cash and not necessarily in futures, given the kind of you know, high beta volatility that we have seen in Yes Bank. And this is not, of course, my suggestion. This is well, my learning from all the analysts that I speak to on a day-to-day basis. So, well, there you have it. Those are my 2 bits on your position sizing and risk, because risk is also something that becomes extremely important. Now, if you have about a 1%, you know, withstanding or as far as per trade of your risk, then of course you will not be able to afford your position in futures and options naturally, because it just has a larger lot size. Hence, in certain cases, cash is always more advisable. Naveen.
Yep, absolutely, and I totally agree with you, Agam. It's better to take a safer bet in terms of taking a position in cash rather than going for a leveraged bet into the derivatives market. Pull up Tech Mahindra as well as Piramal Enterprises. So Piramal is down at least for the 4th straight day. You are seeing some bit of weakness for a lot of these IT stocks. So even Wipro has seen cuts of about 1%. Pull up TCS, and if you've not checked those stocks, what they've been up to this morning, TCS is marginally in the red right now, while Infosys, pull up that one as well, is down 0.5%. Amit, IT stocks, I think they made a comeback in the December series. Do you see that momentum continuing? Is there any trade that you foresee in any of these IT companies for the January series?
So, well, if you look at the overall rollovers, one stock stands out completely is NIIT Tech.
Oh, yes, that
space.
Yeah.
The stock has seen a very good run up since 1500 odd levels and now hovering around its all-time high level. So I believe there can be some outperformance compared to the overall IT pack. NIIT Tech can see some good performance in the mid-cap space. And the large-cap space, I would continue to prefer TCS over any other Infosys or HCL Tech. So TCS and NIIT Tech would be my favorite pick at this point of time.
Right. Nirav, I know that you've also spoken about TVS Motor Company and Coal India, but perhaps in a slightly longer time frame, anything that you'd like to recommend for our viewers as we move into the next year?
Yep. See, I'm seeing a lot of action in PSU stocks, and I've already said Coal India, but I'm seeing good action in BHEL. I know they are down, but they are at a point where looks like open interest is turning positive for them, and probably if not Jan, the first quarter of the next year they will perform. Just a matter of timing. So I believe keep an eye on these stocks, along with those, stock like Oro Pharma, which has, made a huge dent from 800 odd levels to, 400. What had happened in Oro Pharma was, around the 800 or the top levels, the volumes were very high. Some distribution had happened with high volumes. Those volumes have come back around the 420, 430 odd levels, and now the stock is sustaining about the same. So I believe these stocks will perform in the first quarter of the next year, and they are the most likely going to be the next 25-30% gainers going forward.
Okay, well, the focus will shift to these PSU stocks owing to divestment target as well for this financial year. Having said that, for Nifty, we're trading very close to yesterday's low. So once again, 12,200 will become an important mark to monitor. Yesterday, we did defend. We did not breach the 12,200 mark. So let's see whether we hold that level today as well. But I think we've mostly discussed all these buzzing stock futures for today. Just watch out for the auto pack, considering you will be getting the monthly sales number tomorrow. So yesterday there was a rally in the Nifty Auto Index, but that's given up, I think, majority of the gains. I think Nifty Auto Index is now down 0.5%, and metals also bounced back. So sustained gains seeing for the metals index, that's up by about 0.75%.
Okay, well, on that note, we are concluding the final F&O episode for this decade. Well, hopefully many more to come, certainly on BloombergQuint, but I am going to take a moment to thank both our experts, Amit as well as Nirav, for joining us and taking us through their views. Wishing you all a very, very happy new year, as well as a very prosperous new year as well. That's a wrap on this edition, but don't forget to also go through our BloombergQuint.com futures and options pages. That will also give you a lot more for your trading purposes.
Well, we'll see you guys tomorrow as well. For the time being, thanks a lot for watching the show, and thanks for your continued support. Stay tuned to BloombergQuint.